Welcome back to Selling Your Business with David King. I'm David King, and today I'm joined by Nancy Rix with Atlas CPAs and Advisors. Nancy, welcome.
Hey, thank you, David. Glad to be here.
Great. Atlas is a national small CPA firm and advisory firm serving companies in the middle market in all industries throughout America and doing international work and domestic work. I'll let Nancy elaborate a little bit about her. Tell us about yourself, your education, your background, how you got here today to be working for Atlas, doing what you're
Right.
doing for clients.
Great. Thanks, David. And again, I'm very happy to be with you today. I'm a CPA and I've been practicing for about 40 years now, so quite a while. I started my career with a Big Four firm in the Silicon Valley back in the 1980s and had a lot of really great experiences working with clients like Apple Computer, Genentech, and a lot of high-profile biotech and some software engineering firms up in the Bay Area, and saw a lot of liquidity work being done in the 1980s with companies going public and really the advent of the biotechnology industry. After I spent that time with Arthur Young, primarily on the audit side, I moved back to Chicago, to the Midwest where I'm from, and I went to business school at the University of Chicago. When I got out of business school, I went back to, at that time then it was EY, and I went back directly into the transaction practice and spent most of the 1990s working for private equity firms in Chicago and New York on the buy side, working on transaction work. So after that was about the first 20 years of my career or so, David.
It's actually
Yeah,
it's a small world. I
yeah.
was a CPA. That was before I went to law school. I studied accounting, and I worked in audit for Deloitte for a couple of years.
Hmm.
But I worked in Silicon Valley, and this was the heyday of the dot-com
Right,
boom, and there were IPOs every other week. We'd do
right,
four in a month.
right.
And so I may have worked with some of your old colleagues on offerings, then I wouldn't have even known it, that we would have crossed paths at
Have
different
some
times.
overlap. Right,
Yeah.
right.
So
It was a fantastic time to be, working in that space
mhm.
with particularly in the biotech area back in the 80s up in Northern California. Anyway, after that, I really, wanted to do a lot more transaction work and potentially SEC work, and went back to EY and spent another 10 years or so and ended my career with the Big Four firms, starting the private equity practice in Chicago for PwC. After that, it was really time for me to step back and to um, not travel so much. Was doing heavy traveling, and right after 9/11, I really wanted to step back from that kind of work and decided to start my own practice in Southern California, where my family lives. So the for the last, say, 19 or 20 years, I've been working primarily in the lower middle market area with all sorts of industries and different uh, clients in the Southern California, doing everything from financial audits to tax planning. Um, done quite a bit of international tax work with the biotechs here in Southern California. For a lot of reasons, they have a number of international issues. And then for the last 20 years, I've spent about half my time helping those clients sell their companies. Periodically, I do still work on the buy side for private equity, once in a while for a strategic buyer that has private equity backing. I did some buy side work locally here in the last 2 years, but it's been primarily on the sell side. And I've gotten involved in a lot of different transactions in different industries and doing different types of consulting work on the sell side over the last 20 years. So I ended up with Atlas CPAs and advisors primarily because I was really ready to finish my career in the last, say, 10 years working with a larger firm and really running an M&A practice for a national firm. And so that's what I'm doing now, or at least doing quite a bit of training in the Q of E area and working with the existing clients and filling a need that we have in the firm for some M&A expertise. And that's really what I wanted to do.
It sounds like you found a perfect niche for yourself and the good kind of return to some sort of balance there, that you've probably got a fair amount of independence today, but you've got the resources of a firm behind you that can help you, land those big fish when there's opportunities to work on projects and they want to see the resources behind you, but you also
Right.
you
Exactly.
work, you're very independent, I'm certain.
Yeah, exactly. So, we've got resources all through the firm. We have valuation. We have a valuation specialist to help out in that area. We have some other international tax people, some multi-state tax assistants, and an army of financial analysts and CPAs to help out get companies prepped for sale.
So if you had to describe your sweet spot for the clients you serve and the type of work that you do for them, how would you describe the work that you're doing?
Yeah, so I would describe the sweet spot as really being there from the very, very beginning of the process. And helping to educate a business owner who, really by definition, they probably have not been through a transaction before. And so they're really starting from, a position of not really understanding the nuts and bolts of how a transaction works. They know that they are, ready to maybe retire or continue on with a new owner. They want some sort of a liquidity event. And so my sweet spot is really in the middle to lower middle market area. So anything from, say, a 20 million to maybe a 50 million, maybe even up to 100 million in transaction value type of deal. So the reason why there wouldn't be, I would hesitate to talk about deals with a higher enterprise value is only because we, there may be larger firms that might be, better for that area. And really that's my sweet spot because I deal directly with the owners of the company, and it's a smaller group of shareholders usually, and I can have a little bit more influence, and there's more time to be spent with the business seller, explaining the process and working with them and getting them prepped.
Now,
So it's a personal touch type of sweet spot.
And when you say the beginning of the process, you mean the beginning of a transaction. You don't usually get retained as anybody's CPA from the beginning of a company and work throughout. Do you work with people usually like on a transaction, hired gun to help us with an M&A sort of thing?
Both. Okay.
Yeah.
So
Okay.
I have clients that many of my clients were long-term clients that realized that we were there, that we had that expertise to be able to help them sell their company. So when they started thinking about it, I've always done a lot of counseling in that area with them to try to help them get prepared well in advance. So we always do that as a rule for our regular tax and audit clients. So I'll give you an example. A couple of years ago, I had a referral from another CPA to their software consulting firm. And at that time, this was about 3-4 years ago, and the valuations for this type of work were very, very high. And the owners of the business, there were four primary shareholders, were pretty sharp, and they decided that what they wanted to do was to engage a CPA a couple of years in advance to really get themselves ready for sale, and to make sure that they had the appropriate sell side broker, investment banker, the right attorneys, and really the right CPA to have them really prepared for what was to come. And that's the best scenario. And I prefer to be involved at that stage with either an existing client or a new client. But I do frequently get brought in at well, what I would say the last minute, as a hired gun to, to help facilitate the
Well,
transaction.
that's a good segue there. So if there's a good project where you're brought in either, in advance and you get a little growing time together, or if it's, at the right time, once people start making up their mind about a deal, how much time from your engagement through to the closing of the deal and a post-closing cleanup, of course,
Hmm.
but how much time do you usually have? A couple of years with this client?
Well, it depends. So, just like anything else, the answer sort of depends on the situation, and it can take as long as 18 months in advance, depending on whether the company needs an audit, a financial audit,
Mm-hmm.
or review, or some sort of independent. I'll call it an attestation on the financials of the
So
company. Mhm.
Atlas does audits and reviews.
So we do,
Okay.
and we have a system worked out so that there are other people in the firm that can
Mm-hmm.
do that work, and we can satisfy. We have certain professional standards that we have to adhere to, so I
Mm-hmm.
can't
Sure.
necessarily be consulting and be involved in the audit,
No,
but
no,
but we
but you get
have.
those firewalls between you and you get the independence.
We've
I remember
right,
all that
right,
stuff
right, right.
from
So we've got
yeah.
all of that, and so it takes a long time to get on the audit team's schedule. So if you need, for example, if you need an audit for, let's say, 2022, that's something that you need to be engaging your auditors with now. And
Mm-hmm.
it could, in the last few years, even now at, in October, you might be too late to get on the auditor's schedule for,
Mm-hmm.
for prime audit season. So yeah, so
I
it
can
can be.
remember I'm sorry to interrupt, but like in Silicon Valley, I would work on companies that would have a potential valuation where they could go public. And independent accountants would meet with them and said they simply don't have enough people on their system here to have internal controls and that
Right.
sort of thing so we could get comfortable with this. They've kind of got to go through the growing pains of having a sufficient accounting system. So it helps early on for people planning to know, well, if you're going to
Right.
get audited, you need to have, the boots on the ground.
So 2 years ago, I was approached with a potential, to help out on a potential deal with a a drug discovery company here in San Diego,
Mhm.
and they had another arm of the business where they were actually doing manufacturing in China, and they had inventory in China, and they wanted to get lined up for an audit. And that type of thing takes a long time because you've
Mhm.
got to find the appropriate firm in China. You've got inventory counts to do. So depending on the type of business, it can take at least a year to get the audits complete if you need
Mhm.
audits. So if none of that kind of thing is needed, there's still lead time in making sure that the the tax situation for the company has been, appropriately cleaned up to the extent that there's been any non-compliance. And with the complexity in the tax laws, particularly in the last, 5 to 10 years, it can take quite a while to get uh, everything cleaned up. And I'll give you an example. One of the prime areas that we have problems with is non-compliance in the way of filing state tax returns in
Mhm.
multiple jurisdictions. And many buyers and I'm sure that you can speak to this as well, David, they don't like uncertainty.
Mhm.
In fact, really don't tolerate uncertainty, in my experience. And so there really isn't an alternative in many cases to getting those tax returns that, if there's been non-compliance, getting them filed, getting
Yeah.
into there are voluntary disclosure programs to get into for non-compliance. So it takes a long time. I've had situations take as long as 6 years to get resolved.
Those
Um,
those are those are problems that do come home to roost. You can't sweep that under the carpet. It's not like
right.
an unknown and will this problem ever come around? You will come upon their radar and they will come back for every year you didn't file. So it's immediately face the music and file and get current. Yeah.
Yeah, and those things do take time, particularly if you've had non-compliance in various states. And all of those rules changed over the last couple of years in terms of filing requirements for both sales and use tax and for income tax in various jurisdictions. It's gotten very complicated, and particularly for middle or lower middle market companies, there just may have been non-compliance during the pandemic and before. So those things take time. So I would say, just to give you, definitively, when a business owner is thinking about some sort of a liquidity event, 18 months is a good rule of thumb, and a year at probably minimum in letting not contacting an attorney or a broker, but certainly letting your CPA know, and making sure that your CPA understands that you may need to bring in another CPA with expertise in this area to help out and to identify and flush out some of those problems.
Do you get pulled in on engagements where people really kind of have let their books, they need to clean up their books?
All the time. In fact, about 100% of the time.
I tell people, do you remember Live Aid, the concert in '83? Yeah, okay.
Yeah.
Well, Crosby, Stills, Nash and Young came out and performed, and everywhere, whoo, And one of the announcers even said, if they knew they would be up there today, they would not have let themselves look like this.
Yeah.
So in some people's books, it's like, if you knew that you were going to take it to the market, you would have started a little bit sooner getting back into shape.
Yeah.
So.
Yeah, and I'll tell you why, because a lot of I'll give you a reason why that I think maybe a lot of business owners don't fully appreciate, and that is, and I've got a little bit of a different perspective because I spent so many years working on the buy side for the buyers, and so I try to look at the situation also from the buy side so that I can prepare the seller for what the buyer is going to do. And as I said a minute ago, the buyers don't tolerate as much uncertainty as maybe someone operating a small business would tolerate. They're writing a big check normally, and they're putting themselves on the hook with some banks, and they realize that they're going to have transition issues. And what they really want to know is they want to de-risk the transaction in any way and to any extent possible. And so part of it is just, not being willing to tolerate excess risk. And so they want to know that the seller has been interested and engaged in presenting, the best foot forward. And then a big element there is trust. So again, when the buyers are coming in, they're writing a big check, and even more than writing a big check, they have limited time. And so particularly if you've got a private equity buyer, they have a limited amount of time, and they don't want to even start diligence or start working with a seller, or giving the seller, talking about a fairly high valuation when they perceive that there are going to be problems in getting the deal done. And that is a function of their time. There are a lot of sellers out there, and they really want to allocate their time into a situation that has a high likelihood of closing.
With companies and their own, accounting systems and everything, I may have been old school here, but from when I started in 1991, even smaller businesses had somebody in-house who was a CPA who
Right.
had the simple title of controller, and they were qualified to do that job, and they would have maybe a couple of accounting staff. And these just weren't the most highly paid people. They were, qualified CPAs with a couple of years of public accounting experience. And it seems that everybody has just gotten away from that and uses outsourced accounting services. I know that service providers are more, entrepreneurial these days and offer a lot of services, but I don't understand why more people don't simply have a controller. Is there a shortage of qualified controllers out
Yeah.
there?
Yeah, so I think it's a lot of different things. So there's definitely a shortage of qualified controllers, number one. Number two, I think a lot of entrepreneurs I'm seeing more and more have what I call the app mentality.
Hmm.
And what I mean by that is everything is outsourced and everything is, a push of the button away,
Yeah.
and that includes their own internal accounting. And so what they want to do is they want to just take it completely off their desk and have it be the responsibility of someone else. So I think it's partly that, mostly the shortage of good accountants, the inability of of a business owner to evaluate who would be a good controller, and discomfort in hiring a relatively high paid person for that job. I think they're
Hmm.
just not comfortable doing that. And then also the proliferation of, the financial analysts, controllers, CFOs that are out there are now, working for many different companies at the same time. And it's
Hmm.
just a shift in the way we're working. I, I, I don't necessarily think it's a positive thing,
Mm-mm.
but it is definitely where we are.
I see a lot of kind of confusion in it, and there's people will have turnover over who they use as their outsourced providers.
Right.
There's data security issues. I'm like, I really thought the old system worked fine, but I also understand that right now there is a shortage of people graduating with accounting degrees and becoming new CPAs. More people want to be a computer programmer or just do something
Hmm.
different than accounting, that it's not getting the draw that it used to. Is that consistent with the profession?
That is absolutely consistent. The young people coming, we don't have as many people studying accounting in school, or finance. And when they, the ones that we do have coming out of school, are getting snapped up by the big four firms, who just have literally armies of young CPAs that are taken out of the mix, because they're working for very, very large companies, primarily due to regulations around, and
Sure.
the time consuming nature of auditing public companies. Is just a very labor intensive process. So a lot of the labor is just completely taken off the market, and it's gone to the biggest firms.
Yeah, maybe some of the people, that there's an overabundance of attorneys out there. Maybe instead of going to law school, you can get people can major in accounting, and the work, especially the transactional work, it's related, and you're going to be seeing a lot of the same type of stuff. And a lot of lawyers dealing with transactions. We got to work with numbers all day long, even though we don't bless anything. Maybe some lawyers, before they make that decision, might want to look into accounting if you want any of these type of people. So anyway, enough of career advice.
Right.
When you're working on a transaction, is the focus more on the tax accounting issues or the financial accounting issues, or both?
Right. That's a really great question. I'm really glad you asked that, because in my experience, and I think, your CPA listeners will get a chuckle, from this when I say that when our clients decide that they're going to talk to a potential buyer, or maybe they're thinking about some sort of a liquidity event, we find out oftentimes well after they've already hired their advisors and maybe have a potential buyer or two out there,
Mhm.
and they call us to find out what their tax liability is going to be on the transaction.
Mhm. Mhm.
And so there is a great, misperception that that's what we do, is we get the taxes paid on a transaction. And the reality is that it's much better for us to get involved, ahead of time, because frankly, the tax part of the transaction, there are some things that need to be avoided so that the transaction is more tax efficient than it would be otherwise. But there are, um, bigger issues, that can be handled by, a good CPA on the team with experience in this area, that are more important than the tax issues.
I think you and I probably go through the same thing all the time, of having to bite our tongue and not say, I could have helped you a while ago. But
Right.
usually with certain things, whether they're legal or tax accounting, the ship eventually sails, and something you could have done has gone. I don't know if it's rubbing salt in a wound to tell somebody about what they could have done to mitigate their taxes. But oftentimes we get to the end and it's like, yeah, these opportunities have gone.
Well, that's one factor. And I think the other factor is business owners are used to using their CPA for compliance work,
Right.
for getting tax returns done. And so that their idea is that that's what their CPA is going to do. Because most business owners have never been through this before, they don't really quite understand that there is a whole other body of issues involved in the deal that involve working capital adjustments and the larger umbrella under purchase price adjustments that the CPA can and definitely should be much more involved with earlier on in the process, because those things are not necessarily a large part of the deal volume, but they will take a large part of the attention away from the parties to the deal when you are trying to get it closed. And what I mean specifically by that is I have seen time after time after time after time sellers getting wrapped up, upset, confused, delayed, and not understanding how the purchase price adjustments work.
Right.
And that is because they haven't really gotten, had a good lesson or explanation of the process. And that can be done well ahead of the fact so that everyone knows what's going to happen. And I think personally, I think those are the more important areas, because I like to get the sellers back on track thinking about the important things.
And most people, it's true that there's, at least it's just anecdotal wisdom, that people trust, their most trusted advisor is their CPA.
Right.
And most of the referrals that I get come from CPAs. So CPAs are the first to know. And as long as your CPA is going to be the first person to know about your plans to sell, it doesn't hurt to tell them sooner rather than later. And your CPA can't read your mind, and they're extremely busy with everything they're doing. If you're thinking of selling, there's nothing wrong with picking up the phone, calling your CPA and telling them, I'm looking to go out in a few years. Give them some time to think about it, and then have a meeting in their office.
Right.
So many people don't take advantage of the CPA. Oh, I thought you'd come to me with the plans you never told me about. So.
Right. Right. And, and again, your CPA listeners will understand that, for most of our clients, we know what you care about. We know who your children are. We know where they're going to college or not going to college. We know who they're married to. We know who your grandkids are. We know, what you plan on doing in retirement. We have all of this history with you, and we know you so well and your family so well. We can give you the kind of advice, something other than just tax advice. And I do.
Yeah. And I get that from my CPA, because I go in every year, sit down with him and tell him everything that's going on, because he does. Let me just, for the benefit of saying, for the benefit of all the listeners out there that are business owners, let's say you meet with someone and they're 3 years out, and I know every set of books is different and every transaction is different, so the advice is going to have to change. If they are 3 years out, and just to take a generic company, say an S corporation located here in California, what would you start advising them to do to think about mitigating their tax hit up the road? Let's say they're a manufacturing company.
Yeah. So there's not a lot that can be done to mitigate, except understanding how the process is going to work. And so let me dive into that a little bit. So the tax consequences on a transaction are really going to depend on a couple of different things. They're going to depend on whether the basic structure of the transaction, whether this is considered a stock transaction or an asset transaction. And I won't get into the nitty gritty, because I don't think time is going to permit that. But that will be the first step, is understanding, what you're buying.
We got about 9 more minutes. Give the kind of the nutshell, tax versus asset, because that's the grand prize.
Yeah, it sure is. And so A stock transaction is where your buyer is actually buying an equity interest in your enterprise. So if you are an LLC, then the buyer would be buying a membership interest in your LLC. If you are a corporation, they would be buying the stock. And so how that works from a tax perspective, the basic tax framework is that you've got capital gain on the sale of your business, and that's directly it's a transaction with between the buyer and the shareholders. The asset transaction is something different, and it is a transaction where the buyer is buying the assets of the business, including all of the goodwill, meaning what's not a tangible asset on the balance sheet, the thing that gives the company value, we call goodwill. And so in an asset transaction, the buyer would be buying all of the goodwill plus most of the assets and some of the liabilities of the corporation. And what happens is that the tax is paid on that at the corporate level on an ordinary income basis. And then what happens is the corporation then either pays tax if it's a C corporation, or just pays a nominal state tax in various jurisdictions on state taxes, and then all of the cash and whatever assets and liabilities are left over in the corporation are distributed to the previous shareholders of the company. The entire process, really, from a tax and accounting, maybe not so much on the accounting side, but on the tax side, is driven by whether this is a stock versus an asset transaction. The important thing to realize is that from the buyer's perspective, they usually are looking for the best of both worlds. So they want the benefits legally from a stock purchase, because it's very difficult to transfer in an asset sale.
Right.
The seller needs to transfer contracts to the
Licenses may need
buyer,
to
and
be
licenses,
assigned.
things like that,
Yeah,
and that's
right.
extremely time consuming.
Yeah.
On the plus side, with a stock sale, the buyer doesn't necessarily want all of the seller's liabilities, including tax liabilities. So there's a trade-off there. And David, what I've seen over the last 25 years is that the attorneys like you have gotten so much better at protecting buyers from from liabilities related to a stock purchase, that buyers have gotten much more comfortable with a stock purchase than they were, say, 25 years ago.
Right. They
For
can
that
be
reason.
negotiated to the same allocation
Right.
of risk. There's just no reason for that to drive. I get it that the taxes will often be determinant, and but there's no reason why the liability allocation, as long as it's a seller who there's going to be some recourse against, if they're going to go to Guatemala and hide the money under the mattress,
Right.
then there's not a whole lot you can do either way. But you can allocate the risk to
Yeah.
be the same place.
So yeah, and so what I've seen over the last 25 years is new innovations like rep and warranty insurance, and things like, the attorneys have just gotten a lot better at knowing how to protect both the buyer and the seller with protective language in the contracts. So the buyers are good generally and desire a stock purchase, and that's good for the seller. So, why don't we see all stock purchases? Well, we don't see all stock purchases for, there's one primary reason, which I'll get into, and that is because an asset purchase will allow the buyer to make some elections on a tax basis that would allow them to write off the majority of the cost of the purchase, the entire purchase price, over a maximum of, say, 15 years. And that is an enormous benefit to the buyers, an enormous benefit. And so if your buyer is planning on holding the business for a number of years and not just flipping it, they're often interested in being able to make that election to write off the purchase price, to make it super tax efficient from their standpoint. So from the very beginning, there should be a discussion with the seller to educate them on the differences between the stock and the asset purchase, and whether it, and what it means to them from a tax standpoint.
If there's one thing that I would want to impress upon business owners today, is that the biggest cost of the selling your business, the biggest expense you're going to incur by far, by leaps and bounds, multiples of anything else, is your tax liability.
Mm-hmm.
So it is important to start working with your accountant and wrap your head around these issues. If there's one thing you want to leave with our listeners today, the one thing that they should most keep top of mind as they plan for a sale transaction,
Mm-hmm.
take your time, feel free. What would you want them to remember?
Right. That's such a great question. Thanks for throwing it out there, because I'd really like for sellers to know that it's extremely important to pick the right investment banker or slash broker representative to market your company, and to be very careful about the buyer that you choose, and to do it's not always a comfortable prospect to do any due diligence on your buyer, but I have seen so many transactions just either blow up, take way too long, show just erosion of value as the months go by, because you may be prepared and you may have great advisors on your side, but if you have or your investment banker has gotten you involved with what I call a bad buyer, you're going to be in a world of problems. The thing that I would, and one of the reasons is because you do not want to get involved in a transaction and have it not close.
Mm-hmm.
And when a transaction dies, I can't tell you how many times on the buy side I've been on transactions that were previously that a transaction maybe a year or two prior died for some reason, and the buyers, once they know that, they will not stop until they know the reason why it died,
Okay.
and they will be all over that, and so, and it diminishes the value of the sale, and it helps it creates a situation where you potentially have trust issues with your buyer, and that is a very that's not an optimal situation. So my advice would be to start early, pick good advisors, don't try to go cheap.
Yes,
And
perfect. And
yeah,
that is all sage
right,
advice.
right,
And I can say for certain that the choice of the right CPA is also paramount.
right.
And Nancy provides excellent services to her clients. I've worked with her. She is an ace at what she does. And she's been a wonderful guest on our podcast here. Thank you so much. I
Yeah,
definitely want to have you back again. Think of additional topics you want to educate, because this is golden stuff.
yeah.
Well, to everyone out there, thank you for joining us. We'll see you next time on Selling Your Business with David King. Bye-bye.